Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract for the third day of June 2010. This, of course, is a Thursday. And looking at an interestingly quiet session, one could say. A little bit of a gap open we've had this morning. Head and shoulders formation came down to test the trend, broke the trend, given the negative divergence that we see. Actually, we'll go ahead and point that out. As you can see right here, we had a negative divergence opening up. So we had a new high in price, but we had an extreme negative divergence in this, our primary discretionary indicator, primary proprietary discretionary indicator. And we also had some divergences here. We had a divergence there, not so much there, not quite as much there, although certainly, yeah, right here we certainly had a new high in price and a lower high in this indicator right here, this indicator right here as well. Negative divergence. So we had negative divergences all over the place, which suggested to us this in concert with the horizontal significance of the around 1100 level, which 1100 to 1105 had been the previous high, around 1102.50 or so had been the previous high. So that suggested that this bull open, this bullish gap, was definitely not going to hold. Once we got the right shoulder right here, it was a head and shoulders formation, had a retest right here, went on to break the trend from around 1102, we'll call it right down to about 1090. So about 12 points in the S&Ps right there. Beautiful trade setup was the case right there. But it's since been quiet in the midday on this Thursday, and as you can see, we've actually started to begin to see some bullish emergences. We have bullishness here. This has become an extreme bullish as we go into the close. Bullishness here, back to green right here, and fully green right there. So we actually and of course we're back above the trend. So the only thing standing in the way of the market right now is the early session highs around 1100 1105 and the horizontal significance of the aforementioned previous resistance, which if we scroll out a little bit, we can see right here on that day right there. So as you can see right here in the late session on the 27th, going into late last week, was a pretty severe resistance, and we actually see declining essentially that day, and we had full bearishness, but it was a very choppy day on this, the 28th day. But coming into the first day of June, we had a gap lower open, tried to break above the trend, but just really choppy in our underlying indicators. And as you can see, at close, given all this bearishness, we had extreme bearishness and under the trend right here. So this essentially was a fake out move. And then yesterday on Wednesday, we participated nicely right here. As a matter of fact, the MAP DT version 4.0 has been outstanding again, going all the way back to this day. We'll look at that in a second, but really catching the moves down short here, up to the long side there. In fact, the MAP DT version 4.0 AHR caught so much of this move that it gained $6,000 yesterday. It's a $25,000 portfolio. We're going to talk about it in a second. But as you can see, why did the market move higher? But if you scroll out a little bit, you can see positive divergences right here. Almost a new low in price. Had a gap, just came down to close the gap, but extreme positive divergences there. So once we broke above the trend, here's a little choppy there late in the day, but as you can see, really a nice continuation move. Kind of the same thing today. Try to continue up, but we're just really not getting it. So it's kind of a choppy day. We're not going to really make any calls right here, given the whippiness of the intraday dynamics. So that's a look at the, but one could argue definitely sell around 1100 and 1105. Definitely want to sell new lows below, let's say 1089. Go ahead and buy 1106 and just set your targets and stops wherever you'd like. But that's your entry point, certainly on the intraday. We'll go ahead and call it ES. And we're going to go ahead and move down now to a blank screen. Well, that's always good to look at. So we're look at this beautiful trade. This is our Evo, long-running Evo, been around about 5 years. Look at the catch and the move, buying at 641.30 in the Russell and closing at 658, 17-point gain, $1,700 for the Evo, so definitely participating nicely. Yesterday was the Evo, but we're looking for here a chart of the daily market. This is the S&P 500 cash market, and as you can see, we're maintaining our official bearish stance from 1158. That huge convergence of the be-all, end-all trend following support resistance measures here at the 1100 level, converging with this horizontally significant 1100 level on the ES. Definitely just a great selling opportunity, as mentioned. The beautiful setup this morning as we retested this level to short. It was a beautiful short setup. Definitely looking to take short profits, however, right here on this day, as you can see right here. One could argue we'll call it 1089.41 was definitely take your short profits. So 1089, 1090, that's 60 points. If you want to go ahead, and we're going to stay officially bearish, but definitely these are the early indications to go ahead and book your gains. In fact, we had take long profits right here around 1173.27. Didn't go to bearish to 1158. So you're looking at another 15 points that you would have saved had you taken that signal and not ridden out the rest of the continuation move. So definitely take short profits is the signal right here at 1089.41. For us, we're going to hold our official bearish stance for now, for the time being. But we are certainly seeing, given this snapback from 1040, we mentioned the market loves the 1040s and 1080 levels, and certainly the 1100 level. But definitely going to remain bearish, but certainly seeing some bullish indications. They definitely want to scale back on your long exposure. So now we're looking at on a chart of the daily. And look at this beautiful. This is our Dow Day Trader 8.0. Again, been around for many years. Many years is the case. Looks like a beautiful shorting opportunity right around here at 11.220. To 10.250. Beautiful. Look at that extreme high right there. Tried to break above it, broke right back below it. Now just retesting. Great shorting opportunity for the YM. We don't have any trades today in the Dow Day Trader 8.0, but look at these amazing trades. This has been a large part of why the MAPDT version 4.0 HR. HR means high risk, high return, but essentially is concentrated in some of our best performing models that we've had for many years. So we're going to go ahead and actually look over to that. In fact, because the MAPDT version 4.0 HR was a standout. Oh, actually that was Tuesday. Here we are yesterday. As you can see, the MAPDT version 4.0 HR, $25,000 account, or you can run it without an HR as a $50,000 account, but gained $5,895 yesterday. In fact, over the last 4 days, I believe, the portfolio has gained $11,270. Last Thursday, it gained $4,000, then a small decline of $400. Tuesday, start of the holiday shortened week, made $1,770. $5,895 was the case, as mentioned yesterday. Look at that beautiful. That was the Dow Day Trader 8.0, I believe, right there. As you can see, catching the whole of the move yesterday. In fact, a large part of it was $3,720 was due to the YM. But as you can see, continuing to put up monstrous profits. But before it made $5,895, we actually sent out to our clients that we actually had, I think a lot of our portfolios may have finished down that day, but again, outperforming has been the case with the MAPDT version 4.0 HR, made $1,770, I believe, on a day where largely a lot of the portfolios were lower. Given this whippiness, I think we got chopped up a little bit, but again, outperforming was the HR version 4.0 MAPDT, catching and being able to withstand the whippiness. Beautiful head and shoulders formation, as we can see right there. But we send out to our clients. We have a special $2,500 portfolio every 3 months. $1,700.70 is get you 3 months of trading. No promo code required. In fact, just go to the website and you can click on it. We just took the profits that it made on Tuesday and said $1,770 will buy you the next 3 months of trading if you want to upgrade to the MAPDT version 4.0 HR. And that, of course, was before we knew that it was going to make $6,000 just the next day. As you can see, the Dow Day Trader 8.0 right there, again, outperforming $2,360 was the gain on Tuesday. So, again, no promo code required. And what's more, if you purchase 2 of these quarters, so it'd be about $3,500, 2 of these $3,600, 2 of these quarters, that'll get you a year. And what's more is the broker will essentially pay you back that money each quarter. You'll get rebated $3 a round turn. If you do a year, which is about 50% off, so essentially just buy 2 quarters, the broker will pay you back. So if you subscribe to a year, 2 quarters at $1,770, usually it's $5,000 for 2 quarters, which will get you a year, and the broker payback program. But right now, just $3,500 will get you a year of the MAPDT version 4.0 HR, and the broker will pay you back $3 a round turn every quarter up to the cost of your subscription. Yeah, what an amazing idea. So, if you have any questions, go to the website, chat with Support Team Live, or shoot us an email to admin@MiniAnalyst.com, and we'll see you next time.